welcome everybody, and thank you guys for joining us today. We have participants from a lot of different countries and a lot of different backgrounds, a lot of different companies. So it's very excited to be here for this panel discussion on how to accelerate growth through digital journeys. What we back in the days called digital transformation, which has many names now. So with us here today, we have 4 very high-profile panelists. We have Alessandro, we have Andrea, we have Olivier, and Henning. So before we get started, I am going to hand over the microphone to the panelists here to introduce themselves. So Alessandro, maybe you would just give a short introduction to yourself. And I had actually prepared a joke for you especially, because I was going to say I didn't write the book on fintech, but you actually did.
It's called Reinventing Banking, available on Amazon and all other major booksellers. Thank you very much, Alex, for the intro. I've been working in fintech for many years. I started off with G Capital in the late 90s. I built their first website in 1999 in Europe. I then joined PayPal as employee 11 for Europe, building their merchant services team. Then I was the CEO of Paypoint.net, and then the CEO of digital banking at Lloyds Bank. So I've had all the scars and all the experience, and actually to be able to talk on both sides of the divide. I run my own consultancy firm right now, Pacemakers, and we help large corporates identify innovation or develop innovation through partnering. So we believe heavily in partnering. And as you said, I'm a writer also, and I speak publicly.
Good, perfect, and welcome to the panel here, Andrea. Very nice to have you.
I'm very disappointed, Alex. You don't have a joke for me, and I wanted to suggest, Alessandro, next time there should be like an icon on the side, which immediately you can purchase, or QR code purchase your book.
Exactly.
So that you have a real digital experience.
That's a good idea. I didn't think of it. I should have done that. Yeah, payments.
Yes, exactly.
That. Yeah.
I'm telling you. So really, thank you so much for having me today. My name is Andrea Pražáková. I lead innovation, ESG, and gaming for Mastercard. I am a passionate Web3 enthusiast, crypto, gaming, as I said. And my background before I joined Mastercard, I was 23 years in retail and SME banking. I was a group head of retail and SME banks in Africa, Asia, and Europe. With some of the big groups, which some of you might know, Raiffeisen, Erste Bank, UniCredit, and then Bank ABC, which was a Zimbabwean listed entity. Today, as I said, I manage innovation, ESG, and gaming, 3 very different topics. But of course, throughout my work, I get a lot of engagement with fintechs and innovation. I am really excited for today and for the questions, and look forward to the debate.
Very good. Thank you very much. And then I'm going to hand it over to our homegrown talent, Olivier.
Hi, everybody. So great to be here today. We're very much looking forward to the discussion with Andrea, Alessandro, and Henning. I'll very briefly introduce myself. I'm heading the fintech practice at Star. So really, my focus has largely been in product management and various product and technology related activities in financial services and fintech throughout the years. So quite a few years with SunGard and FIS, then worked on some smaller ventures. I mean, my interests, generally speaking, span capital markets, banking and core banking, cards and payments, wealth management, and various other things. So looking forward to the discussion.
And I am Henning. I work with Olivier. I joined Star a couple of months ago, and before that, I've been in London for 20 odd years, most of that time in working on startups in the fintech space, initially with trying to become a part of the bank's tech stack, which is always a big challenge. It's a little easier now that you can provide things from the cloud, but I have done both startups with VC backing as well as corporate entrepreneurship. And most recently, I ran a small payment consulting company. So I have different type of fintech and payments experience than being inside the bank, if you will. Just very briefly, if you're wondering about Star, what we do, I'm not going to make a long plug, but it was founded about 15 years ago. We're about 1,000 people, and our focus is really to build solutions for companies, startups, scale-ups, and enterprise companies. So we've been doing this for a long time, and fintech is one of our sector specialties.
Very good. Thank you very much. So for the attendees out there, I just want to give you a little bit of practical information. So we have actually a Q&A module that is available here on Zoom. And we're also going to be having a couple of polls. So we'd love it if you would share your point of view whenever that pops up. So on that note, let's get into the real business. And just to start off, what an exciting period to be having this discussion. We have a crazy financial environment right now. We have the Wild West in the banking sector in the US, banks being taken over over a weekend, large banks that we all thought were stable. We have the same thing for Credit Suisse in Switzerland. We have rapidly rising interest rates. We have inflation that's galooring. We have an inverted yield curve. So based on that, and I know, Oksana, you have a couple of slides with like a short piece of information, but we know that banks right now are planning to spend almost $30 billion in just an AI in embedded to embed that in existing systems by 2025. Alessandro, knowing all of this, all of the turmoil that the banking sector is going through right now, wouldn't it be better for banks to basically just focus on their core business and make sure they weather the storm?
It's interesting you'd say that, because that is the core business. The core business is engaging with the customer, and just because you are there's some blips in the way the economy is working, focusing on your core business is not an option. You have to change, you have to transform. I was speaking to a colleague recently this morning about what's going on, and I think the analogy of where we are right now is that we are very much, it's like the industrial revolution in technology. I think all the principles and parameters of the past are being challenged and transformed. There's examples of how to do things differently that are doing really well. There's challenges and problems with systems. Crypto is great, but needs regulation. Open banking is great, needs regulation. Opening up the markets are operating different ways. It's just like the beginning of the industrial age, where things were not clear, where children were used in factories and so on. I'm exaggerating a bit, but I think what's going on right now, it's a truly transformational time. And I think the option of standing alone, quietly sitting in the corner, waiting for this to go away, it just does not exist.
So what should they do?
Well, first of all, they should rethink a business model. I think one of the challenges that banks have is that they think that they're stores and they sell products. They have to be thinking that they are enablers of what their customers want. And I think until very recently, the option to deliver what the customers want was to deliver a specific product. So a credit card, a current account, a mortgage, and so on and so forth. But ultimately, what customers really want are very simple things. They want to pay somebody. They want a credit line. They want to be given money when they have a shortfall, and they want to protect a surplus. And this can go from savings all the way to insurance, pensions, etc., investments. And what the banks are doing right now, they have siloed their offerings in specific product silos and they're trying to maximize the P&L of these silos instead of thinking, okay, is that really what I want to be doing? I want to be engaging in a situation where I actually maximize the value of the customer. And I think about, they have all this discussion about lifetime value, but most of us know that lifetime value calculations are very inefficient in the way they're done. But looking at redesigning the bank in a way that is customer focused rather than product focused could be a first step forward. And the fact that we are going through an economic transformation, this is not going to slow down transformation, it's going to accelerate it. So I think that's one area you have to be conscious. So it's going to be more expensive to do things the old way. It's going to be less desirable for customers. I think we know that customers love digital banking. And I think altogether, staying still is actually not staying still. Staying still means going backwards.
Yeah, I want to add on what Alessandro was saying. I fully agree that, this is a new age and new revolution, right? I think that one of the key components is to say, relook what is your position and where do you want to play, right? So you can really decide, say, I will just try to match what everybody else is doing, trying to catch up. I will take a fresh look from the top and say, how do I restructure myself? Where are the opportunities? I mean, now with digital banking, we are now stepping into the age of Web3, right? Which is decentralization. And banks are scared of it, right? Banks are scared of crypto and decentralization. I actually personally feel that there is a great opportunity because theoretically in Web3, we will own all our data, right? I cannot imagine my mother owning her own data, right? So my mother will need to have a data broker or data aggregator, right? Somebody who will actually help her on the journey of customer experience to be able to do certain services, right? The moment, many things start to be tokenized. So the banks have an opportunity to be custodians of the wallets where the people will hold the movable and immovable assets and tokens inside. So I think that there is such a opportunity size, which is today not leveraged, right? To say, where this is going, because it's not stopping. Alessandro said it really beautifully. It's not stopping. It's just going faster. This is like between old-fashioned train and now it's like a Japanese speed train, right? So am I just trying to keep up, or do I, step aside and say, let's look at it differently? Do I have the right people? Do I have the right strategy? Am I focusing on the right things, right? The banks, for example, sit on an incredible amount of data, right? But show me how many banks have a chief data strategist who will be able to tell them how to mine the data, which data I keep, which data I throw away, which data I can, start to do synthetic data and, do some predictability model, for example, for my lending and so on. But, so I feel personally that it's really, I love Alessandro, I will quote you, I will steal it from you. It's a comparison to industrial revolution, and it's very exciting. And the banks have an opportunity either to stay still or just, take it, but not in the old way.
Yeah.
No, absolutely, and I think the point that in particular Sandro made about going back to basics and going back to what does the consumer or the corporate customer need is quite key. And I think the second question almost to ask is why us? So I think you also have as a traditional bank to understand where your strengths lie, and I think you in a way that involves being realistic but not pessimistic and not thinking, oh well, because there's digital banks out there, they're gonna kind of take our lunch. I think it's also realizing where the strengths of the traditional banks lie. Things like their knowledge of their home market, which let's say a new entrant, a new digital bank may have some amazing technology but may not know the local markets as well as others. Things like having kind of the network and I would say the human aspect of the relationship, or if you like, with customers, in particular when it comes to, for example, the B2B or SME banking side of things. Things like I think Alex was mentioning the recent bank failures. I think it kind of reminds us that one key aspect of the business of being a bank is about maturity transformation, and basically collecting deposits, borrowing short, and then kind of lending long term. So that kind of the strength of the balance sheet is also something that as a traditional bank you would have, and not necessarily the new entrants would lack potentially. So I think it's to focus on your own strengths and then where you're not necessarily the strongest or in the strong position, looking at, for example, outsourcing, partnering, buying technology off the shelf, etc. I think that's the one of the key.
And the fintechs want to do the sexy stuff, right? The stuff which is in the front and the navigation, and the banks have an incredible opportunity to actually play the back office, right? Because they have a system, they have a trust, they are really well regulated, right? And this is anything that the fintechs don't have. So instead of maybe having your brand as a branch on the main road of Oxford Street, maybe you disappear and you will just make a lot of money of empowering multiple different businesses, right? Through the strengths which Olivier, you just described.
I think you have a very interesting point there, because what is the real asset of a bank? Is it the fact that they hold deposits? Is it the fact that they have the technology, the know-how, or is it the trust of the customer? I think I would argue that all of the other two can be found in alternative ways. The trust of the customer is the hardest thing to build. And right now, the banks are being challenged by players that, I'm going to be controversial here, that whose only value add is the fact that they're not a bank. Okay, so if all they have to do is to fight competition, is to replicate what the competition is doing, they, what kind of industry would that be? The competition is so easily manageable. The problem is that the banks have built-in issues that prevents them from transforming, and they just need to kind of focus on those. And it's initially it was technology, so all the banks were on mainframes, and now they're all on cloud. By moving to the cloud, they have redesigned their platforms, they're rethinking what the propositions are, and so on. But ultimately, it's about the way they think and the way their culture is defined, and what is the cultural legacy. To give you an example, I'm on the board of a small UK bank, and if you want to open a bank account with them as a small business, it takes you about 10 minutes to do that. The same equivalent on some of the bigger brands in the market can be 2 weeks. And they are using the same technology, they're using the same regulation, the same access to data, and so on. How is it that these guys, both regulated by the regulator, satisfying the regulator, are able to do it in 10 minutes and the other ones have to take 2 weeks? There's only one reason: culture.
I think,
Yeah,
go ahead, Hemming. No, I think, you touch on two really great things, that which is the DNA of the organization, right? How do you change that? And do you actually walk the talk, right? If you hire the right people, do you allow them to do it? But one of the areas which I want to add is, if you look at the traditional banks, right? And you walk in, they might have 15 saving accounts, right? 5 current accounts, 17 different types of loans. I mean, not to sell that the people in the branches, call centers are confused as hell because they don't even know how many new products constantly. It's just the same thing in a different color, right? Just put a different lipsticks and call it a different thing, right?
Yeah.
So one of the biggest issues as well is that, the banks are not focused, right? And they have too many things. Now they might solve the system, but maybe out of 100 types of products, only 20 make the money. And the rest is a residue, which requires a lot of back office support, a lot of operational support, a lot of training. So I think there is that part as well, which makes the banks really slow, because they're adding, but they're not taking things out. And I think that's one of the things in which you see in the newcomers, right? In the smaller banks that may EKKO Bank in UK, great example. They just do one thing, and they don't want to venture into too many, and they're successful. And the big banks, they have so many and too many products, right? And it's really difficult to move if you have such a big baggage on your shoulder.
Yeah, if I may, I mean, I think it's interesting to observe what's happening now between neobanks and the traditional banks, and maybe this is a question more than a statement. But it seems to me like there's a conversion happening, in that like all industries, it's really about you have a business model and you have execution, and you need to get both right. The traditional banks have the right business model in the sense that they understand that you lend at a higher rate than your cost of capital. That's how you make money ultimately. But they have fallen behind in execution. And the neobanks, they get the digital execution, but they're very often searching for a business model that makes the money, right? Being disruptive is not a business model. And so if you get stuck on one or the other, you are indeed stuck, which is what we've seen. I mean, if you look at Revolut and N26, for example, they're constantly having to enter new markets in order to find some kind of measure of growth to satisfy their investors, but they're not making any money. While if you're looking at, for example, Monzo, which is not even 10 years old, and we just announced that they're looking at profitability, and that's through lending, traditional lending, that they make money on. And at the same time, you have JP Morgan Chase, which is 200 years old, and who picked up 1.6 million new customers in less than 2 years because they're actually getting the execution right, because people love their digital interface and their applications, etc. So it is possible for both sides to demonstrate that they know what the other side is doing. And I think maybe there's some kind of conversions that it's really about understanding, how to get the fundamentals executed well. And I think there are all these issues we raised. Certainly on the cultural side with traditional bank, it's a huge issue, that they just don't have the right people. But I think it's possible. I think we can see some examples that are possible. What do you think?
And on that topic, in terms of execution and so on, maybe Andrea, you can shed a little bit of light on this. But everybody's right now talking about AI. It's very, very exciting what's going on with the development, and has been for a lot of years. We just thought it was hype, but then this amazing new tool came along and showed us what we can actually do, right? So how can banks, payment systems, actors in the general financial sector, how can they leverage and implement AI so it makes sense for the customers, and but also in terms of the business?
I think that there are, multiple different categories how a bank can use it, right? And I like what you said, that, artificial intelligence, machine learning is here for many, many years, right? I mean, at Mastercard, we use it in processing for many years now. Now, as a bank, I can again decide, do I use AI and machine learning and generative AI in things which are super visible to the consumers, so that it helps my brand and my, if it is in concierge services, voice activation for transactions, all of these, or automated bots? Or do I utilize machine learning and AI in the backend to optimize my processes, right? To make them more efficient, to make decision-making engine, to make engines which will recommend investments, for example, who will, analyze my data, make right recommendations, right? And there's many things. I think I mentioned the voice activation. This is something that many customers, I mean, practical example, right? I was driving today to the office. I needed to send some money, right? And of course, as I cannot wait, I'm very impatient. I was, on my phone, my face, and, trying to, luckily the beneficiary was predefined.
While you were driving, you were on your phone. Is that what you did? While you were driving?
Did I just admitted it? Yes.
So I do it too. Sorry.
Thank you, Alex. Not to let me hang
exactly.
here. But imagine, right? So either plugin or widget on your phone, which would be provided by the bank, right? Which would allow me with my face, and of course with the right cybersecurity elements into it, to execute commands, simple commands where I actually don't need to type. My kids don't even type anymore, right? So I think that there are things like that which you can really start to show customer in a customer-facing manner, that you utilize the new technology. But ultimately, I think that the power is in the backend, right? Where you can truly optimize your day-to-day processes, your infrastructure, right? And make it more efficient. And use and say, how would I save more money? Even save planet, right? I mean, if you you go to a branch today, right? I haven't been banking in Europe for a very long time. I give you an example for here. The amount of papers you still have to sign, it's horrific. So, right? And if you think about it, a kilo of paper is about 300 to 400 liters of water and 1.2 kilos of CO2, right? So just if you start to think from a perspective of sustainability, is what the AI and machine learning can help us to create these efficiencies, not only of saving people, but also saving planet. I think there is no limit to what the banks can do, but you need to decide what are the key categories you want to focus on, find the right balance, something which is customer facing so that they can see you innovative, and then play in the back end to optimize as much as possible.
No, absolutely, and I think the point that you had mentioned, in the first part of the discussion, Andrea, about
that I was driving.
No, not this one. Not this one. I don't remember that at all. But essentially, the point you were mentioning about the data and obviously having a central view of your data, I think is going to be a key driver of the efficiency of AI. I think the algorithm in the again, I think is likely to be, commoditized in some way. And really what is going to be making your AI different from, let's say, the bank next door AI is going to be your data and how you use it. So that kind of compounds that aspect being on top of your data.
I would totally agree with that. I think AI is useless if it doesn't have access to data. And I think data is both the static data that the customer generated, but also connectivity to entities that provide that. So one interesting thing that we hear a lot about today, the key to success of AI is orchestration layers. And the ability of connecting different players, the data connection, the different providers, the banks, and so on and so forth. And it's really interesting that organization like yours, Andrea, which obviously started off as payment processing, is now looking at orchestration, which is a truly exciting new area, which you're well positioned to achieve. Now, I'm not saying you're going to make it, but I definitely, you're saying, I think you're well positioned to do that, because the orchestration layer is the connection of all the different players. All these different players connecting each other can generate data. That data has to be made available in a digestible way for AI to operate. If you think about banking is the ideal digital product, and the only reason why it's not more digital than it is that other industry like media and news and so on and so forth is regulation, right? So an experienced entity that says, well, you know what, your data is going to be safe with me, or it's going to be used in a good way, and I'm going to weed out dangerous players and so on and so forth, is going to become a ways of powering the transformation. So in order to really transform, you have to have a foundation, and the orchestration layer can become that foundation in my mind.
And I think the permission by the customer will be so critical, right? I mean, look at lending, right? Lending is super inefficient today, right? The scorecard, how you look at customer, you assess in a very high level their ability to pay, right? And that's just on mostly static data. But there is a massive component, which is also your not ability, but your willingness to pay, right? And also your behavior data, which you can read on social media, from your purchasing experiences, from how your emotional reaction. So there's multiple, today psycho tests, which will, obviously spill out if you are a good person to be lent to. But today, if you enter a bank, you almost like everybody is treated the same way. And as a bank, I could really differentiate myself to say, okay, what is the data I can get on somebody like Andrea? And by remaining in data privacy, you can start to create digital synthetic data which would look like me, and run obviously predictability model and say, okay, I have the data which she has on her account, data on her card. I can go and say what are the, you can easily obviously access cookies of people who are like me, right, with some kind of profile. So how much time she spends on the social media, what are the comments she does on LinkedIn, for example. So how can you start to assess the personality character, right? What is the shopping experience? Does she shop responsibly? So that means that she's sustainable character. So you can have a sustainability score, social score, psycho score, credit score. You can start to mix this together, right? And now we are still on a fiat level. We are not even on a level of open banking or Web3, right? So even if I start to look at the first level, wow, I could give Andrea so much better experience with lending. I could decide in 30 minutes because I would know, what, how she will behave. Will she pay me back or will she not pay me back, right? And not wait for sometimes maybe 10 minutes, but in many cases, maybe a week, maybe even longer. So there's a massive opportunity in that space.
Absolutely. And it's funny because that part, exactly that part that you're saying is, I only know the Danish banking system, but if I apply for a mortgage, that's actually one of the things that the banking clerk will do, right? But humans are inherently bad at assessing other humans. So that little portion that really determines whether I can actually buy my dream house or not is actually determined by a human, their judgment of who I am as a person. Am I credible, and so on, right? At least in Denmark, that's what we do right now. So that's an area where you only have an interaction with a person for, let's say, 20 minutes that actually makes sense, and where you can test if their knowledge of what they're doing is good, and so on, right? If you had that information on consumers, why not just process it and
Right.
use that aggressively, right? So yeah.
If I may, I think it's touching on really interesting points on terms of there's a lot of discussion about the impact of AI and the democratization of it, etc. But on employment, etc. I think AI is a fantastic opportunity for companies to actually empower and push decision making down to more junior people and give them tools to make actually a decision closer to the customer. And you see it not just in banking, you see it like you can make nurses, better diagnostics tools so they can write prescription. You can see, procurement teams can approve invoices, and you can have banking staff, make credit decisions, or independent advisors make credit decisions much closer to where the user is, and that has to be good for both employees and the customers, and that's an interesting, way to think about it as an empowerment tool rather than something threatening.
Good.
I always think
All right. I have
Yeah.
to close it down on that note and go on to the next topic. Otherwise, we're never going to get through it. But I'm happy that it's a lively discussion, and I'm hoping that people are enjoying it. But the next slide that Oksana is going to show is related to how some bank software and backend is built, and like not just banks, but many other companies in the world, they build systems that are based on ancient technology, and they've tried to repair it throughout decades, and now they've ended up with this huge monolith architecture that is slow, inefficient, and doesn't allow for any agility at all. So I guess the question that we would want to pose here is, knowing what we know now about how many banks software was built, but also some of the really tough regulations that we are seeing in this sector. How can banks approach the digital transformation in a productive way that's not gonna I almost want to say overthrow the government, because it is going to be extremely expensive.
If I can give you my personal experience, I used to work in a big bank that started the digital experience in the late 70s, early 80s, right? So when we were building digital propositions for it, we had a very big problem on load, for example, in the sense that if you're an online banking, you will connect to the mainframe and connect to the core many more times than having to go to the branch. So if I have to check my balance when I go to the branch once a week or once a month when I go to the branch, I may want to check my balance every day, and that multiplied by 19 million customers, it really breaks things. So that was the first decision that we made. So we realized that as we were going digital, it wasn't just an option of creating an interface to the old systems and that. And we quickly realized that when we try new things, the biggest cost and time was to test if the core could take it. And because the core had become a black box, because the guys who programmed it in Fortran and COBOL no longer were, it's not that they were still there, they weren't in the business, but actually they were no longer alive, okay? So we have the software running, and we have, so who did this? Well, he, peace be on him, so he's no longer with us. It was usually he's, by the way. And it was really sad. So the realization was, okay, so if I move this old thing coded in this way to the cloud, first of all, I have to break it up and thread it and understand what the threads are. And I was talking to one of our people who did that. They had to decompose the core of the bank into functions and the way an organization was set up. And they were at Lloyd's close to 8,000 different applications that worked and engaged with each other. And it wasn't an option of picking one up and you move that and you create the APIs. They were all connected with each other. So you couldn't just move one, you had to move a group. So a big challenge for these people were to connect and find areas of connectivity between the different applications that were done. And that was incredibly painful. And the saddest bit is when you then did this and moved it, you ended up in something that was like the traditional core, but on the cloud. But it was still like the traditional core.
Still the same thing.
So you weren't rethinking what the bank could do. And that's why you have new companies that are talking about next-gen core, cloud native cores, and so on. And they are thinking, okay, think about the outcome and rebuild the outcome in a way that is doable. But the banks have these long tails that they can allow them to do that. And because there's some segments, as you were saying, Andrea, that there's unprofitable segments that people still work with. And there's some customers and products that are unprofitable and they still have to deliver them. But it's not worth spending the money to moving them to the cloud, so you keep them. So you have this hybrid solution. So if somebody were to tell you that there's a business that is obsolete in the way they do business, that they have to move to new platforms, they have these new platforms, but they can't let go of the old platforms, as this hybrid world will continue for a very long time, you think this is suicidal, you know? And when you think about a new bank, the Starling Bank came up and they said, you know, they asked Anne Boden, who's one of the most greatest visionaries in banking, I think, worldwide. They asked her, what's the difference between Starling and a normal bank? She said, we're just like the normal banks. We're only 30% cheaper and 30% faster. Simple.
And that's the reason why many banks today, you know, go and create a twin of themselves, which is lighter, right? Yeah. So because they don't want to go through the pain of restructuring and changing their core. And I mean, ultimately, you know, if I create like a neobank of my own, right, the next to old one, ultimately I should aim to move all the customers from my old one to the new one and then just decompose the you know, recycle whatever it is on the old side, because I think to maintain it, and as you, Alessandro, rightly described, there was no ever enterprise layer, right? There were no APIs. Everything was hard code built together, and to decouple it, it's a nightmare. So I think that the decision to build a younger arm, right, fresher with new ways, because so much change, and then migrate the portfolios which you actually want to keep, not the ones which you don't, into the new bank. It's a good strategy to go.
And I think on that note, let's have a poll and ask some of our attendees, what do you believe is the most important factor for banks to achieve these transformation goals? Let's see, I'm just going to give it 30 seconds for people to answer. There should be a box popping up on your screen where you can vote. So some of the questions here are, oh, that's interesting. I'm still seeing answers coming in.
Yeah, I think you're spot on. You see example, you know, JP Morgan, again, Chase, you know, they built their online brand Chase, and to the extent that that's cannibalizing their own business, that's a lot better than somebody else doing it, right? So that kind of that mentality is important to have, that you're willing to go out there and embrace it, even if it's going to cost you, because you know,
you're a bit of an idealist, Henning, you know, because the guy who's running JP Morgan is not going to say, okay, Chase, eat my cake. They're going to fight it, you know, so.
Yeah, but you know, but they're having an excuse. I met so many bank CTOs and saying, well, you know, we can't do that because we got this legacy system, and you know, that's just not going to fly as an excuse. You got to and accept that. You got to move on.
And you need to have the right people, right? You cannot ask the old technical architect or chief architect who've been running old system and who never has exposure to fintechs or telcos or, you know, big successful technology companies. You need to bring in people who look at it with a very different pairs of eyes, right? Who look at it from even technical experiential, right? Because if I am a bank and I say, you know, in the past, like Skype did in the past, right? Skype outsourced everything, right? So if I am a bank and this is my core, this is I'm good at, I want to stay in it, but all of these different bits and pieces I want to outsource, I need to be able and be very agile that people can plug in and plug out in a very controllable way. But if I will use the same technical team or the same CIO, not saying that the old CIOs were best, please don't misunderstand. I will get some hate emails. But you know, bring in people who actually look at it. Like if I'm an Apple developer, I go to the Apple developer zone. What is my experience? As a bank, I would want for the fintech, if they connect to me, to have exactly the same experience, right? It must be really easy. It must be well set up, well regulated, so that I can consume the services and they can consume my services really fast.
So Henning, I'm gonna shut it down because it's a really good discussion, but I wanna also just highlight some of the results that we got. So it seems that people are pretty in agreement with you. So it's a very intelligent team that we have joining us today. But basically everybody's saying that the main challenge is seamless integration of new technologies with existing systems. some people also said that there is that there might be some resistance to change within the organization, and of course we see that in a lot of, well, basically all people except me. I like change, but most people really hate change. So how do you address that part? It's difficult for some employees think that AI might take their job. Some people think that they're going to become indispensable, and they're maybe afraid to acquire new skills. So how do you communicate and manage some of that resistance that can be to change within the organization?
I think that's a good point, and I think as an anecdote on this topic, I want to share. I think just a few days before this this panel, there was an article in the mainstream French newspaper saying the French banking sector was lacking COBOL specialists. So things are bad when that actually hits the mainstream press, if that makes sense. But I think that's the human factor is a very important part, especially if I agree with what Alessandro and Andrea have mentioned in terms of your transition methods. I mean, there's obviously a lot of kind of paper which has been written on that topic, and I think there's things like this, the AWS 7 R's, like retire, retain, relocate, refactor, replatform, etc. But I think clearly in the banking sector, it kind of makes sense a lot to try and cut those interactions between new and old, and try to avoid kind of yanking a part of your core system and replacing it. Is typically going to result in a lot of pain. You're better off kind of creating the bank of the future and transitioning your business to that end state. I think in terms of winning kind of winning minds and hearts, it's obviously a very difficult thing to do. That's where obviously kind of people leadership and I would say personalities count. It's important to also highlight what people have to gain from it. Whether it's exposure to new technology, they can refresh their skill sets. They can also. I think it's important to explain. It sounds obvious to say, but explain the vision of where you're going and why you're doing what you're undertaking. I think these are kind of the key elements I would take.
And maybe just one last answer from Alessandro, and then we'll move on to
I agree in part. I think.
Sorry, Andrea. Do you okay? Two answers, and then we'll move on.
Andrea should go first. I'm sorry. I feel bad.
No, I was just thinking, because we always say people are worried they will lose job. I think what we often don't realize, this will take a real long time, right? We are not even in the stage of early adoption. This is still prototyping, right? It's still testing. So I think for an organization, it's super critical to think, what does this mean for me in, let's say, 2, 5, and 10 years, right? Strategically, which of the jobs do I want to replace with bots, generative AI? Where the jobs will not? What will be the natural retention? Where do I need to upskill people, right? And in current state, I give you an example what I'm doing. I have a design team in India, right? So I told to my designer, said, you know what? Ultimately, AI will do the UI UX work. They will go on the net, find the best, and then they will suggest. What the skill you need right now to learn is, how do you give the machine the right commands that the UI UX, which the machine spills out, is really good, right? So you might not need to be able to go into Figma and start to create screens and wireframes anymore, because Adobe will be able to do for it, or other solution. But the key will be, will you be able to ask the right questions and put the right commands in? And I think these are the skills which we as employers and companies need to start to think. What are the skills we need to teach the employees so that their job might still be, but it could be completely changed how it will be positioned, right? And new jobs will be created, right? So it's not black and white, right? It's a journey. And I think as a company, I need to clearly outline, where is my journey going? Which jobs will not be there, which will be new, and how do I need to upskill my people so that they can use these tools and deliver even better customer experience than before.
Do I have a minute, Alex?
You just go, Alessandro.
Thank you, Alessandro. You are too kind to give me part of your time.
No, I saw it was. I knew you had something really interesting to say, and you did. So that was good for everybody. No, I agree in part with what everybody said, but I think you have the role of the innovator inside the organization also has to be stated. So there's no organization that you go to and you tell them our business is doomed. We have to rethink who we are, and to do this, we have to invest in. We'll have to let go of your people, and we'll have to accept revenues. Okay, there's no organization that will ever accept you doing that. So the innovator has to create a situation where this doesn't happen. So if you go to any big bank CEO and you tell them, we have to do this digitization of the firm because all the competitors are doing it, it will cost us initially with lots of money that we have to undo in the branches and so on and so forth, because their productivity will go down. But with technology, it will go up eventually. Nobody's going to listen to you. If you tell them, we need to build this new digital platform, it's a new channel, and it will generate incremental sales of 3% next year, everybody listens to you. Okay.
Right.
If you tell people, your skills are useless, you're a COBOL programmer, we don't need you. You need to do other types of programming and other capabilities. You need to be able to be an AI coder. So because you're not, you're going to be fired. So, but innovation is good, and it's going to be good for the bank. They're going to say, I don't care. You need absolutely COBOL is indispensable. You will never get over it, and so on. So, if you tell them, I will help you move from this skill to the other skill, they know that their skill is outdated, and they know they want to learn new skills. So as a manager, we have to realize that we have to manage up, manage down, and manage outside. Okay. Manage up, it has to have some metrics that the up understands. Manage down, there has to be a safe place that you land after the change. And manage outside, you have to deliver what they're asking for you. Of the three, the most important is the outside guys, because the other two depend on that one. But what generates latency and lack of speed is the other two, okay? And mainly, I would say, is the top guys thinking that they just want to protect the fact that they're going to be earning their bonuses next year by sticking to the plan. It was a really interesting study by McKinsey, one of your competitors, about this some time ago. And they asked banks, top level managers and below the CXs, what they thought were the reasons why transformation wasn't happening. And the CX people were saying, oh, we don't have the right people. And the people below were saying they don't let us innovate. Okay.
And the people at the top say, well, we don't have a good business case.
Exactly. We don't have the business people. The one at the bottom are saying, well, we're trying to, but they say no to us all the time.
Yeah, not surprised.
It's exactly, because I guess in the financial sector, money talks. Cool. On that note, let's jump to the third block, which is about partnerships with fintechs, and we have a quote here by Olivier, our internal fintech genius, and I'd like to just augment this with a personal experience of mine. So when I was working as a venture capitalist, I had a fintech company that had set up an agreement with a large Danish bank. And this Danish bank really brands itself on innovation, diversity, inclusion, and equity. It has everything, right? So it's one of those really cool, innovative banks. And the promises were so big to this fintech startup that had a really good product towards people who own and rent out real estate. And so finally, when it came to actually implementing and marketing this tool, nothing happened. So a lot of good intentions, but zero execution. Why is that?
Should I go first?
Sure, please.
What is it? Good intentions are easily canceled when you're worried about your bonus next year. Okay. And I think we all need to realize that we are talking to established enterprises, and what you described, or what's happening, what happens at any innovators, the innovator's dilemma is exactly that, So I know that I need to change. I know that this is the future, but I can't do it because I'm making too much money doing the thing the old way. And the minute I won't be doing that as much money, it's too late. I haven't built it. So look at the music industry. You know, Tower Records saw the digitization coming through. They got a mistake. They thought Amazon was their biggest enemy. In reality, it was iTunes. And they built TowerRecords.com, right? And TowerRecords.com was created just 4 years before they went bust. And then iTunes came, and iTunes said, okay, so we're not going to be selling records. We're going to sell records digitally. And they built them. And then they saw Spotify arriving. It took, again, close to 7 years for Spotify's streaming to stopping Apple from streaming, getting into streaming and stopping the sale of records. And the reason why they didn't do it, they saw that streaming was better than selling selling music online or digital records, is that they realized they were making too much money by doing that. And there were too many customers that said, we want to keep these, we don't want to go. And they listened to the customers. So, you know, and listening to customers is fundamental, but if you really want to change the world, it's not what the customers tell you that you want to do. You need to look at what the customers are doing to be able to do that. Not what they tell you, but what they're doing. And I think this is a dilemma that you have. If you're an established player, you dominate the market, you sound crazy if you want to disrupt yourself. You know?
And Andrea, how do you deal with that? Because you're in a very, very big financial institution and you're working with exactly innovation, right? So how do you make sure that this doesn't happen as much? I'm sure it still happens, but not as much.
No, I think it happens everywhere, right? Especially in big organization because of a comfort which you have, right? And I think Alexandra just pointed it really beautifully, right? You're comfortable because, let's say you're a bank or even us, if you every day you come to the office, you're still making money, right? So what is the pressure of the readiness to fail? And I think that's the, it's to say how much appetite do you have to fail? How much experimentation do you want to do? And are you ready to do it, right? Are you ready to put, let's say, $10 million and say, if it doesn't work, we just, put it away because we think that the third time we try it, it will be something absolutely incredible, right? And I think that there's a lot of pressure from the shareholders, there is a lot of pressure from the customers, and I think that it's not, and the bonuses, as Alessandro was saying, right? There's multiple different components which almost paralyze today many big organizations, right? Willingly or unwillingly to go and innovate fast, right? And I think that's that comfort, it's over the comfort and the the expectation from outside sometimes do paralyze you. But ultimately, I personally believe, right, that it's up to the people, right? It's really about the DNA. If you have, and I think Alessandro was saying about the McKinsey study, right? This is the top and the people say on the bottom. And if you really want to try something and you want to experiment, not always you need to experiment for millions of dollars, right? You can, and I think that's one of the big downfalls of big organization, because we want to do everything big. If we go, it should be like Titanic. It goes big, bold, big impact, right? And why small companies are successful is because they experiment on a smaller level, right? They create a couple of workable prototypes, they test it with consumers, they try, they do a proof of concept, and then if it doesn't work, halas, they put it away. If it works, they start to scale, right? So that principle, and banks are perfect in it. I mean, I've been in banking really for 23 years. You put out product, and then you start to look on another product, right? You don't think, okay, now I put out 1.0. How will my 2.0 look like? How will my 3.0 look like? Would the 3.0 be even there? And I think that mentality of, evolution in products and experimentation, that's something you need to culturally develop in your organization and be ready to fail. So if it's not working, I'm now working on 5 ideas. And I was just saying to my boss today, I said, maybe none of them will work. Maybe none of them will work.
Exactly.
But it's okay, and that's what that support you want as an innovator, that you have somebody who says, just try it,
Yes.
Of course, work in your boundaries, right? That it doesn't destroy the reputation, you don't waste money, and it's not dangerous, right?
Exactly. Actually, it's probably the best money you ever spent, right? Because
experiment,
because you failed. You failed. The only failure is only a failure if you don't learn from it, right? And that's
only failure is if you don't try.
Yeah.
And you worked with banks before. What happens to people who fail?
Exactly.
What happens to people who experiment something and it doesn't work out? Do they say, "Oh, well done, don't worry about it, next time it'll be better," or they say,
I think that's an important point, and that both of you touched on, is that the incentives are wrong, and it has to do with the culture. And I think some banks will be able to operate on their own without cooperating with the fintechs, but I think most of them probably won't be because of they just need that impulse. But the banks, fundamentally, the traditional banks have something very strong and valuable in terms of they understand regulation, they understand risk, and they have a history of understanding how to make money, but they don't understand how to do it anymore. So I think they can learn a lot from the fintechs, and then that combination can be acquired by through a partnership and ending up so you hold on to your customers or your transactions, etc., so you don't lose them. But I think there's a lot to be gained from banks to absorb and learn from what the fintechs are doing on the sharp end of things, where kind of the client's interfaces are. And that's where they don't.
And how should they work together? Like, should they compete, or should they cooperate?
I think it's not only about the fintechs, but they should collaborate, because I think what they need to say about, again, the very easy way to simplify this is think about the customer. What is the outcome for the customer? Okay.
Right.
If you find a fintech that can really complement your proposition, collaborate with them and find the ways of developing things. For example, the PFM tools have been created. Sorry, Andre, one of your competitors just acquired Tink, which is a really good PFM proposition. Why did they do that? Because they want to be able to enter a market that allows them to compete in the orchestration layer with something that is distinct. And the banks are saying, okay, who does the best KYC analysis that I can do and do it? Should I do it in-house? I can do it in-house, or should I work with this third party that can do it better than I do? And the answer is working with this third party is the answer. Especially because if I build a solution myself, that's great. I've done it itself, it's bespoke to what I need. But what if in 2 weeks' time everything changes, technology changes again? Do you build it again? If you have with a third party with an orchestration layer connecting you to them, you just switch the person away. You switch that organization away. So you're constantly innovating. So you need to think as a bank. So if the bank thinks that their user, the value, their USP is what they manufacture, then you're in trouble. If you think the USP is how you interact with your customer to deliver what the customer wants, then it all becomes really obvious. Partnering is the obvious solution. Okay.
And it goes back to what Olivier was saying in his quote, right? Is to say, how do you make it really easy that you have that orchestration layer where you can plug in, plug out, and put people out? And you spoke, Alessandro, about KIC. Scoring is another piece, right? How can you have these dynamic models? And if you don't want the model anymore, you just replace it and simply plug new things out, and it doesn't disturb your overall, core.
Yes, and I think it goes to the point as well that you're mentioning about kind of starting small to build, obviously, trust within the organization. So you want to start with, not a basic part of who you are as an organization, but something that is, not something that anyone would recognize as a core strength. So, for example, if you think of it, let's say if you're a mid-sized bank in the UK, it's unlikely that, let's say, you're recognizing your FX operations as a core strength. So those type of things are the key, I would say, the kind of the easy path to innovate, to partner with fintechs and to kind of prove that it works and prove that there's a positive track record, positive ROI associated to those type of initiatives.
Good. So we're actually running out of time here. It's a great and very, very illuminating discussion. I would like to just end by on this entire topic of fintech and the financial system, to ask each of the panelists here, what is the one advice that you would give to organizations that are struggling to implement innovation?
Embrace technology. Don't push back.
Hire the right people.
Olivier, what would you say?
I was going to say, well, obviously working for Star, kind of a biased participant, but I think generally, I would say to be able to, I think, put the customer first. So I think that innovation should be here to serve the customer. I would say would be a key element that put forward.
I would totally agree with Olivier. I think about the customer, and the customers not want, but need. They're not the same thing.
And on that note, I am going to thank all of the participants and all of the panelists here. Thank you very much for your input, and thank you to Oksana for hosting everything.
Thanks, Alex.
Thank you.
Thank you so much. Thank
Thank
you. It was a
you.
pleasure. Thank you.
Bye. Take care.
Bye.
Great time. Thank you.